Of course, there should be proper maintenance of records in post offices. The record keeping should be in such a way that it is easily retrievable for quick submission whenever requested by competent authority. And the preservation period is 10 years for KYC document and transaction vouchers. Earlier this period was 5 years, now it has been raised to 10 years. And in AML, there are two reports mandatory. One is cash transaction report and another is suspicious transaction report. Cash transaction report is something which is submitted whenever a customer makes a transaction exceeding rupees 10 lakhs in cash. This is not just confined to a single transaction but to a series of transactions. If the total amount of a transaction made by a customer exceeds 10 lakhs, then CTR report should be submitted by post office on 3rd of following month. The division should compile a report received from post office and submit it to circle office by 5th of every month, and circle office should report it to principal officer at directorate by 8th of every month. If this report is not submitted in time, this will be taken as nil. And now I would like to reiterate section 13 of PMLA Act that rupees 10,000 minimum penalty to maximum 1 lakh penalty may be levied for each such missing entry. Suspicious transaction report. Irrespective of amount, if any transaction appears to be suspicious, then STR report shall be submitted. If a customer tries to make a transaction with a counterfeit note or attempts to make a transaction with counterfeit note, that can be included in suspicious transaction report. This STR report should be submitted by division on the same day from receipt from post offices. Post offices should submit the STR to division on the same day of occurrence itself, and circle should submit it to principal officer at the directorate by same day on receipt from the head of the division. Now let us see the definition for suspicious transaction report. A transaction including an attempted transaction, whether or made in cash, which to a person acting in good faith gives rise to reasonable ground of suspicion that it may involve proceeds of offence specified in schedule to act regardless to a value involved. If a head of the post office feels that there is something suspicious in the transaction involved, he can very well include it in STR. A transaction which appears to be made in circumstances of unusual or unjustified complexity. If a customer moves a fund from one of his account to various account and again moves the fund from various account to his account, and if there is no need for such transaction, then it may be included in STR. Transaction which appears to have no economic rationale or bona fide purpose. Suppose if a student is making a deposit for huge sum into his account, then it should be reported in STR because there is no economic rationale. Any transaction which gives to reasonable ground of suspicion that involve financing of activities relating to terrorism should be reported to in STR to FIU. A transaction which includes deposit, withdrawal, exchange or transfer of funds with whatever currency, whether in cash or check, pay order or other instruments by electronic or other physical means, that can be included in STR. CTR report is meant only for cash transaction, whereas suspicious transaction is meant for all modes of payment, whether it is done through cash, check, pay order, even electronic means. In simpler words, suspicious transaction is something which appears unusual, which appears illegal, which has no clear economic purpose, which involves proceeds of an unlawful activity, which shows any indication of money laundering or terrorism financing activities. Submitting a STR is an obligation, but failure to submit a STR is an offense.